Good morning, guys. Good morning, good afternoon, wherever you are watching from. It's your boy Baby Trader again. So we're here for today's session. So yesterday we talked about the market is of which I told us the market is always in three trends, three formations. We have the range band, which is the accumulation. When the market is just bouncing, it's not going up, it's not going down, just in the range. We have the range bound. We have the bullish market, where the market is progressing to just one direction, the upper side, your impulsive push, a little correction, impulsive push, a little correction, impulsive push, like that. That's the bullish setting of the market. Then we also have the bearish setting of the market, where the market is tending to the downside. We have a push with the downside, a little correction, a push with the downside, a little correction, push to the downside, a little correction, and continuously to the downside. So the market moves in three phases, which is the first one, the accumulation phase, or the accumulation, or your ranging markets. That's the first one. That's the first one here. Then we have the uptrend, which is still known as your bullish market. This is your bullish market bias. Trend, bullish market, or your uptrends. That's the second one. Then the third one is your bearish markets. Cash a downtrend there. So the market is always in either of these phases, one, two, one here, two here, or three. So your duty as a trader each morning when you come to the chart is to make sure you understand which of these market phases you are currently on. Then you know how best to engage. If you see a consolidation market, it's always advised you stay put because you can't necessarily guess where the breakout would favor. So to avoid guessing, since you are not just a gambler, you're an educated risk taker, not just to trade anyhow, you avoid the ranging market, you set a clear direction. Then once you see a market pushing to the upside, giving you more green candles, breaking highs, continuation, you know that's a bullish market. And you look for just buying opportunities since the market will go long. I appreciate for a long while. Then once you notice a bearish setting, you look for selling opportunities, like you look for sales because the market will depreciate on the long run. So let's go to the chart again. So now let's look at this data from somewhere here. Okay, from somewhere here till the current data. Now we can see that Euro USD on the 1 hour chart has been giving bearish vibes. What do I mean? We had this impulsive sell into correction, impulsive sell, correction, massive sell again, correction. Sorry, yes, massive sell again, correction till this current zone. That's that. Here again, we had a sell market, sell bias to the downside rather. Check again. We had an impulsive sell, correction, down market, a little correction, downside, correction, give us a double top formation here. Down market, correction. Down market will have correction now then. So that's your bearish market setting. Then for your bullish market setting, you see your candles, more green candles tending to go towards the upside. And here you have them. That's an impulsive push, small correction, impulsive push, small correction, impulsive push. Same thing here. We have this impulsive push here, impulsive push on the upside, the correction, impulsive push. So this is bullish market setting. We have a bearish market here. Sell market, correction, sell again, correction, sell again, correction, sell again, correction, and these final sells. Then we have a ranging, the market ranged for a little while here. Had a consolidation phase. So here you don't do nothing. Here again, had a consolidation. Had a consolidation here. So you do nothing as well here. So you have to understand what the market is doing and you know how best to engage. And after each consolidation comes a breakout, either to the downside or to the upside. Now we can see previously we had this bullish push. Okay, let's work with this one. Why the consolidation here? Why the break to the downside? Then we now had a bullish push, impulse, correction, impulse, correction, impulse. Then we had this ranging zone. After this ranging zone, market broke and turned bearish. See the massive sales. Then we had a little consolidation here again. A push to the upside. Consolidation, a push. Consolidation, we are now in a bullish market. So the market is always in either of these phases, the ranging or the accumulation phase. And after an accumulation phase, you expect either a bullish market trend or a bearish market trend. But you have to always wait for the breakout from a zone before you execute. Okay, so that's that on the market phases. And from next video, we'll talk about how the candles pass the message for you to know which of the trend you are in and how to know when the trend is already going out of place, like when the trend is changing from accumulation to either bearish, then when the bearish market is changing from the bearish market to the accumulation phase. I'll do that and upload much later. Okay, stay put, guys. Peace.